Stocks on the defensive, oil at 16-year lows amid the coronavirus outbreak. Shares in Asia fell in another day of negative and volatile trade on Wednesday as the coronavirus outbreak globally continued to weigh on investor sentiment. Australia stocks led losses among the region's markets, with the S&P/ASX 200 dropping 6.43%. South Korea's Kospi dropped 4.86%, Hong Kong's Hang Seng Index was 3.49% lower, while Shanghai's Shanghai Composite fell 1.83%. In Japan, the Nikkei 225 shed earlier gains as it dropped 1.68%. On the data front, Japan's exports declined 1% last month as compared to a year earlier versus a 4.3% drop. Overall, the MSCI Asia ex-Japan Index dropped 3.25%. The sell-off in the markets continued despite the White House said it was weighing a fiscal stimulus package worth around $1 trillion, part of which could include the direct payments to American households. Meanwhile, European Union member nations agreeing to close the EU's external borders for most people from other countries for 30 days. The UK announced a near $400 billion package to help businesses. The European markets also sank on Wednesday even as Western governments promised huge supportive packages to help businesses and citizens get through the coronavirus pandemic. The Pan-European Stock 600 closed down 4%. Losses were less pronounced in Spain and Italy, where the IBEX 35 index and the FTSE MIB Italy index fell 3% each. Meanwhile, oil and gas stocks plunged nearly 10% amid a deeper sell-off in the oil market. Wall Street stocks plunged again on Wednesday as the economic toll from the coronavirus mounts. The Dow Jones Industrial tumbled 6.3% to close the day at 19,898.92, its first close below 20,000 since 2017. The broad-based S&P 500 dropped 5.2% to finish at 2,398.10, while the tech-rich Nasdaq Composite Index tumbled 4.7% to 6,989.84. The S&P 500 is now down about 29% from the record high it notched on February 19th. Shares in the plane maker Boeing sank another 17.9%. Meanwhile, major currencies declined sharply, having accelerated the bearish move against the safe haven dollar. The U.S. currencies continued the ascent amid the ongoing panic due to a rapidly spreading coronavirus. As a result, the Euro-USD dipped to 1.08, though finished marginally above the 1.09 handle. The pound-sterling-US dollar plunged to multi-year lows around 1.1450 and remains under a severe selling pressure early on Thursday. The US dollar-Japanese yen got back above 108.00 and registered fresh local highs at 109.55 on Thursday morning. As for commodities, Brent crude plunged below $25 for the first time in 16 years. The sell-off has accelerated after Goldman Sachs said lockdowns to counter the coronavirus pandemic raised prospect of the steepest ever annual fall in oil demand. Global demand by the end of March could fall as much as 8 to 9 million barrels per day, said the bank. According to the U.S. Energy Information Administration, crude inventories rose by 2 million barrels in the week and ended March 13th to 453.7 million barrels, the highest since July 2019, versus a 3.3 million on-barrel rise. Gasoline and diesel stocks fell sharply as refineries kept capacity steady. At the current prices, no OPEC producer can balance their budget and have enough oil revenues to cushion the blow from the looming global recession. Therefore, chances are growing that some producers may take some extraordinary measures to support the market. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.